Good morning and welcome to the Daily Forex Update, brought to you by Pepperstone on the 9th of August 2018. I'm Darren Sinden, and you can follow me throughout the day on Twitter by following @DS_Pepperstone. Right, let's take a look at overnight changes and price moves to be aware of. A relatively quiet session on the world's global foreign exchanges, save for one standout move, and that in the New Zealand dollar against the US dollar, and the Kiwi falling by a whopping 1% overnight. And we'll look at the reasons behind that fall a little bit later on in the video. Dollar index for its part staying above 95.14, trading shortly before we recorded the video, up around 0.09% over the last 24 hours. Okay, well, let's take a look at what's on the calendar, events that may move the markets today. First of all, we've already had consumer price and producer price index inflation data out of China for the month of July, and we'll take a look at that data momentarily. To come this morning at 8 a.m, GMT will have the Eurozone Economic Bulletin report, an appraisal of how the Eurozone is faring. At 12:15 GMT, we've jump over the Atlantic to Canada for housing starts, a year-on-year data point for the month of July. We will then have at 12:30 south of the border in the USA, producer price index, ex-food and energy, that data for July, and that'll be accompanied by continuing and initial jobless claims, of course, because it is a Thursday. We'll also see new housing price index data for June out of Canada, and then we have a pause until 22:30 when it's business PMI data from New Zealand for the month of July, and to round the day off at 23:50, perhaps the pick of the day's releases, gross domestic product for the second quarter 2018 out of Japan. Okay, breaking news and comment then that's caught my eye overnight. And first of all, July CPI and PPI measures in China come in ahead of forecast, with 2 out of the 3 measures reported also coming in ahead of the prior month as well. Now, that could be seen as a positive sign for China, that there is demand and there is activity in the economy and prices are picking up, or it could show that there are some supply constraints within the economy and it's starting to creak a bit. So I don't think we can judge entirely on the basis of that one number. We'll certainly have to keep a look at what's happening in some of the PPI measures as well going forward to make a judgment. Meanwhile, the Kiwi has fallen 1%, as we just saw, and that's because the Reserve Bank of New Zealand has pushed back its timetable for interest rate rises. I wasn't overly bullish on the prospects of rate rises in New Zealand, but I suppose with a change of government and a new mandate for the central bank, we might have expected to hear something about that going forward. But for now, it looks like we'll have to wait until well into 2019 before the RBNZ actually makes a move. Crossing over the Pacific to the USA, the US has approved a new round of sanctions against Russia for its part in the Skripal poisonings in the UK. Obviously, there are already sanctions in place, but these new measures tighten the noose further, shall we say, around Russian trade and certain Russian individuals. Meanwhile, China has responded in kind to US trade tariffs announced yesterday by adding surcharges of its own to $16 billion worth of US imports into the country. Right, well, let's take a moment to think about something else, food for thought, something to take away with you into the trading day and beyond. And why not think about this? We've often talked over the last 7 or 8 months about the consequences of trade war escalation, but the truth is that this is an ongoing situation as the US and China exchange blows, as we've just seen. And there are now more than 10,000 products subject to the charges. Back in January of this year, there were only 18. This graphic, sourced from the New York Times via flowing data, shows you the scale of those changes. Each of these circles represents goods and services that were subject to tariffs. As I say, back in January, there were only 18 different products, and now we can see how that's ballooned up to include more than 10,000 goods and services subject to tariffs between China and the US. So it certainly has escalated, maybe by stealth, but make no mistake, this is a full-blown trade war. Okay, please take a moment to read the risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about those risks or the suitability of these products for you, then please do contact your Pepperstone account representative, and please do take a moment to read this risk warning. Thank you for your time.